same meeting will continue. I'm just like going to take a break and work on this thing. And this is why I don't record, because it takes, I'm not going to do anything here currently because it takes a lot of computer power to do this recording. Or maybe the prescription was not ready. Or he forgot to bring the food inside. So let's look at like basically intraday market structure, okay? And this is the key to becoming a successful day trader. Uh, People are used to thinking in terms of trends, right? And in terms of like, and if you see, so let's take a stock like this, like when it is going up, there is a trend, and this looks like this on a daily chart, right? But what you do not understand is that between this trend during intraday, there may have been many gyrations in this particular thing, because the way a stock operates on an end of the day basis, on a daily time frame, is very different from how a stock operates during the day. And that's important, because if you understand why things happen the way they happen on a lower time frame, then you become a better trader. So let's look at like the intraday structure, day market structure. What happens for a stock is like, let's say if you go and look at a stock, and let's say look at it, this is how the day's move was. Okay? That means this was the high, right? This was the low, this was the open, and this was the close, right? When you look at any candle, this is how it is going to look to you if it is a upward, like, and if it is a positive candle, like say if you go here and look at something which is like say airy, okay? Obviously it didn't had it opened and then it kept going up, right? And it's like that. Here is the same stock. Okay, it's not a very liquid stock, so let's take a little bit more liquid stock to see this better. Okay, so here like Bright Horizon family has 1.8 million. Okay, so what you see is exactly what I drew there, right? And this is the opening price, right? This is the closing price. This is the high of the move, and this is the low of the move, right? And everybody is clear on this, right? Now, if you look at the same chart intraday, do you see it that same way? whenever you look at a chart which is on a daily time frame, okay, it looks like that, but on a lower time frame, it is going to look very different. And it is important to understand that what happens on a lower time frame is that whenever you look at intraday move of any stock, most of the time, what you will see is that there will be buying impulses. Like say, buying comes in the market very strongly in the first big, like stock starts like going crazily in the morning. Okay, it starts opening and like you see like crazy amount of buying comes in. So if you look at 5 minute channel, like it's like this. What happens after that? It fades exactly, and this is why people like lose money in day trading because they are buying when the impulse move is at its peak, okay, and then when it fades, okay, they don't realize why it faded, and the reason why it fades is because buying comes in, okay, and buying the set of buyers who come in, and then there are followers, and then there are these algorithms and things like that, okay, which all pile on behind this buying, right? And as soon as you detect that, look, and there is a buying coming in, then you enter, the day traders enter, the algorithms enters, everybody is entering, right? But at some stage, this buying just exhausts itself. So on an intraday basis, what happens is like it fades. And typically for newbies, what happens is basically they enter because they are like saying, oh, this candle has formed. This is like momentum burst or this is range expansion. Let me buy. Let me put a stop here. And the guy buys it. And then there is the next thing which you'll see is a fade. And this is very common on intraday time frame. That is why when you look at say TVIX on an intraday time frame, you will see that look at it started with a sale. So somebody thinks, yeah, very nice trade. This is like, and I will put a stop, and rest of the day it will keep going down. I'm such a smart guy, and then there is this violent reaction which happens, and this is the nature of if you study thousands of intraday chart. At the end of the day, the chart will look like this to you, but during this particular time period, the chart will actually be like this probably. Seldom will you find a stock chart which will be like this, which is like very like, and it starts at the one end of the range and ends. Most of the things is going to be, which are going to be, even at the end of the day, it looks like this during the day. It will be like an impulse move, sell off or fade because people who bought it, they're taking profit, or like the buy people who bought it, like it might be a mutual fund which wants to buy a lot of stocks, right? And so it starts by buying 100,000 shares here. As soon as it buys 100,000 shares, like every day traders scanner goes wild, TI-30 goes wild, all the algorithms kick in, they all like, and basically like everybody is buying, right? And all these people who are buying, they are not really buying for holding forever, or they're not like stupid that they are thinking, look, and this is going to go forever, right? They're just looking at it, look, and I bought at $100, and this thing is now up $4. That's man, like that's like 4,000. That's like how many whiskeys? So I'm out, right? And then uh, this person who's buying also, he's not stupid who put in 100K, so he waits, and then this goes down, but he's not finished buying 100K. right? Because he wants to buy 5 million shares that day or whatever. Again, suddenly buying comes in. As soon as the buying comes in, again, bunch of people get into this buying thing, right? And again, like the person stops his buying because he doesn't want to overpay, right? And then what happens is everybody, and especially the later one, they like, then it fades. And many times, like this person decides, okay, I bought 100K and now I bought another 50K. Yes, I need to buy another like 200,000 shares, but like let's wait. All these day traders are going to make my life very difficult. So he stops buying. When he stops buying, what happens is the move actually which went up in the morning in the first 15 minutes like this, sometimes it just fades because there are no more buyers there, big buyers, and the day traders also lose interest. And then again, then he comes in and then there is another buying. And at the end of the day, the candle will look like this. So there are fades. And this is the nature of the market move, which is like you're going to get fade intraday. And the fades are very, very common intraday. So that is why most of the people who are like in a late new, they end up making a lot of losses because they buy. And as soon as they buy, okay, the fade starts. And this is why like in a you have to understand the market structure doesn't lend itself to trend trading most of the time. Once in a while, you will get a stock which will be just like in a trend throughout the day, but the market structure intraday is not most of the time on a large moves is not really trending kind of a thing. It is more series of waves of buying coming in, fades, saves another buy wave comes in, and it's not necessarily that it is going to be like, and after that it is coming in. But like in a TVX is a classic example of this yesterday, right? Here is the open. Okay, it sold sells a little bit. First buy which happened, right? And the first buy, whoever bought it, like, this was like basically $48, and this was like $35. But after that, selling started. Okay, so everybody starts piling on, right? And especially when this thing happens, people think, oh, like I got this, like I got it, and then suddenly the selling stops, and then buying comes in. There is an impulse move, and then there is like this thing, and then another impulse move, and impulse move, and then finally again another impulse move, another impulse move down, impulse move. Uh, Ultimately, this is how the stock traded during the day, but that is not what is visible when you look at it on a end of the day kind of a thing. So this market structure where like on intraday basis, if you are looking at a move which looks like this on a final candle, okay, in reality it might be like this, okay. Okay, that can be one way, or the other way can be like, and it opens high, so it opens like, okay, it goes down, and then there is a reversal, and then it goes up, and then it reverses, okay, and then it goes up finally in the first half an hour or whatever it is, okay, or even you can have a up move and then down move kind of a thing. Like if you look at GD yesterday, which is what I was trading, because it was a possible anticipation kind of thing. What happened on GD during the day? Look at it. This thing went up. This was an impulse buy move, right? After that, it faded. It started fading. So this little bit like in a bounce, this happened, and then finally it sold up completely for some time, and then in the final 15 minutes, it sold up $2.83. So any move which you look at intraday, most of the time, unless there is some news and then the stock starts at one end of the range and keeps going at the other end of the range, is going to be like this. Okay. This is the most common nature of stock moves, whether they are going up or going down, that what looks like the end of the day kind of candle will be, and it can be a candle going down, will be like this. It goes down, it goes up, and then it goes down, and then it might go all the way up here, and finally it might go down, and that is why that candle will be down for the day. Now this kind of a behavior is created by series of buying and selling during the day, because somebody sells, buys, people, there are followers, like followers means like not necessarily day traders only, there are quantitative programs which are like designed to ferret out somebody big buying. So as soon as they ferret out, okay, look, there is a big buying coming in, the renaissance of the world and the big players and everybody latches onto that big program. But like the big buyers have also become smarter to this, so they don't want to just show their hand, otherwise they'll end up paying a lot of money, so they just stop buying. Sometimes they just sell a little bit of their stock to create this selling thing. So then everybody gets out. All the they just want to like it's like the elephant which like moves a little bit so that all the little bit smaller critters sitting on its body like just disappear, and then like again then they buy and then again buy. This is the market structure, okay, on an intraday basis. And lack of understanding of this market structure is the number one reason why people do not make money on day trading basis, because they are thinking, they are coming in from the end of the day kind of a thinking. So they are always thinking, look, and this thing is going to be just keep on going up. There'll be a like a very nice up move. Then I put in a stop, and then I go and like and I drink my coffee and come back, and my stop will keep working and it will keep going up and up and up, and I'll be rich and I will buy an island, and then I will have some scantily clad woman washing my Ferrari and all those things, right? Doesn't work that way. This is the way market operates on a lower time frame. This looks like this on this time frame, but if you look at it on a lower time frame, the same stock would have had 30, 40 trade, like in a moves, fade, moves, fade, moves, fade. And if you can understand this, then you will understand, look, one of the most successful strategies in day trading is what? Fading is one of the most successful day trading strategies. Okay, fade the open, fade a gap down, okay, fade a gap up, okay, fade intraday buying, okay. One of the easy way to make money, and which like pisses off a lot of these people, like then they say, you, why did you do that? Like you jinxed my position. I didn't jinx your position. You posted it here, and then I looked at that stock and I said, okay, this person is saying, oh, this stock is going up, but it is going to fade at some stage, and you go there and like and do, and the thing fades, and then they get angry because they don't understand the market structure. So if you want to make money day trading, you have to look at fading. Yeah. Which is a very different mindset which is required, right? And that's why people are not successful, because they're just thinking in terms of trend following. But fading is the most successful strategy in day trading. So if you see something which is up in the first 10 minutes, what is the trade there? Fade that. Okay, fade the move. Means obviously it is not going to be like in a big fade. Many times it may not be a big fade. It might be just like this thing. But that's how this thing works. Okay. That is why, like when you get like in a move, you get like in a buying binge. You don't join the buying binge unless you found it in the first 1 or 2 minutes. Like, why do you think when I do TI-30 as my main strategy, I was insisting on entering it in the first 1 or 2 minutes, right? And that's because you want to be entering it here. You notice that this is going up and you enter it here. You're going to be stopped out probably because your entry is too late, and this is what is going to happen. It will keep fading. It will keep fading. So whenever you see a move on an intraday basis, your first impulse should be what? To fade the move most of the time. That is going to work. So that is why one of the very successful things on TVIX is always like, look, you have to wait and see when like, it's like going up, to start thinking, look, this is going to fade. And while this candle is formed, when it starts fading is when people short. That's why when people look at it at the end of the day, it doesn't show up, because same way when it is going down, you're thinking is, look at this down move is going to fade, and then you enter counter to that, or at least be ready to enter counter to that. And this continuously keeps happening. This is also why, like, uh, I think Kimberly asked me, like, look, I want to find stocks with not many weeks, but you are going to find stocks with many weeks on intraday time frame, because there is a constant amount of fading which is happening. And that's important to understand, because uh, if you look at that as an age, it's a big age. And it's not only about TVX, it's about any stock which you take. Okay, if it is gapping up or gapping down, what should you be looking at? It's fading. Okay, because buying and selling on smaller time frames tends to exhaust itself. So the exhaustion is such a common phenomena in intraday. And for that, you don't even need to look at the chart. Many times when you're like, many of my trades are not based on chart. I'm just watching this thing. When you're watching, say, the bid-ask spread or the transaction going on IB, and you will see that the stock is going up, going up, going up, going up, like, and at some stage, suddenly, like, it reaches, say, like, a TVX reached $1,000 that day, right? And if you see, because the intraday data is limited, you cannot like see, but like say here, the moment it reached $1,000, okay, the bunch of people who were anticipating that it will fade, and fading that $1,000 was a very, very profitable trade. If you can see it here, this was the candle where like, and it made $1,000, and whoever put in orders just below $1,000 anticipating fading, they cleaned up that day, because that was the trade, right? Uh, because any buying binges which happen, the smaller time frame buying binges, they are followed by exhaustion of buyers. There are no more buyers. Because there are no more buyers, they just like the whole move starts fading, because the people who are in it for like $5, $10 whiskeys and all, they just get out. They get out. There are no more buyers, so the stock goes down. And that's where exactly the retail buyers end up buying, because by that time alert has gone. They had time to figure out how to enter. They had time to figure out where to put an order. They had time to figure out where to put a stop, and then their order got executed. And that was the exactly at the fading point, and the professionals will be fading that. So fading is the best strategy intraday most of the time. Yes, you are going to get a stock which has got some sort of a news breakaway gap kind of a thing. The only exception to fading most of the time is breakaway gap, okay, where like you get a stock which opens and it continuously keeps buying buyers during the day. And if you do not understand this, okay, you'll find very difficult time making money day trading. This is a very different mindset which is required. Fading. If something is going up, you have to start anticipating that it is going to fade. So, and that fading point, like, and people are so excited in the morning saying, okay, oh, there is a news. Fiesta Restaurant Group is going up, like, and basically. But the people who are professional day traders, they're waiting for a fade. So once all the fools have bought, they'll be fading that move. This happened late in the day. Okay, so it's not really a best example, but whenever, and that's why you feel people get so frustrated, because they enter and then the rug gets pulled. Fade. That's really the trade. Most of them are like that. Means I anticipate where it is going to, like, in a reverse point kind of a thing. So it's not only about TVX. Any trade which I do, I'm always looking at, like, on an intraday basis. If I'm doing a trade, I'm looking at a point where like it's likely to thing. And that's why, like when I used to do, I have not been doing TI-30 in recent months, but when I used to do a lot of TI-30 trades, everybody used to keep telling me, look, and why don't you hold it for rest of the day and things like that. But the trade is just like in a 5 minutes or 6 minutes or 2 minutes or 3 minutes because it's going to fade because that is the market structure. Fading unless there's, even if a stock has a news catalyst, as I explained during the day, if it has a buying climax, like you get a buying climax, that's why this is also the reason why the best scan which you can run for day trading, if you want to like do it that way by using day trading scans, is climax buying or selling. So you get a climax of buying or selling, like you get like 3 candles or 4 candles continuous buying or selling. That's likely to lead to exhaustion. Or similarly, you get 3 candles, people are like, things are being sold majorly, and you'll have selling climax or like a climactic selling has happened and there will be a reversal. And it's very common. It's like, this is what you have to understand. And this is the basic fundamental thing many people do not teach you about day trading. And that's why like, you're just like showing bunch of scans, a bunch of like scare charts and saying, oh, buy here. But if you don't understand this nature of this market moves at that time frame and why they happen, you're going to be doing things which do not work. So the easiest way to make money is to always look for like in a climax buying, which is like buying is coming in, buying is coming in, buying is coming in, like basically things are going up, and then you just wait like you wait there. Okay, here, this is buying, buying, buying. And then you wait there and just look at the first sign of fading and you put in your trade. And this thing, the speed with which the fade will happen will be sometimes much faster than the move of this and then like, because it's like, it just catches people by such a surprise. And especially the one who are slow to this game, then it just goes down. This happens every day. And this happens in a day, this happens 10,000 times, okay, all stocks put together. And that, my friend, is your opportunity. Yeah, you can use like an TI throughout the day for trading, but always remember, look, if you're not looking at that, if you run a scan alert, and then from the alert, what are you going to do? You're going to go to a chart, then you are going to type ZM, okay? ZM will open, then you look at a 5-minute chart, and then you'll figure out by that time that fade might have already happened, right? So here is like, and I say there is a, this selling happened here in Zoom, right? And it's not always logical, like, and it's not always that you're going to get like, ideally a good situation would be like after this selling, this is the opening candle on Zoom, right? And you would have got some sort of a reversal kind of, it didn't happen. This down move was immediately faded by somebody, and it started making this violent anti-trend moves or violent fades are very, very common, especially on stocks which have news on it, where you get like a very violent fade. Like this is very violent. Like somebody who was shouting and he didn't get out. Like this thing wiped out his profit in just like, and this looks like this in 5 minutes. If you look at it on 1 minute, it will be even more different. Like if you look at it on a 1 minute, that's where the nature of these violent moves become very clear. Like you got like this thing and somebody faded this and then the move happened and then somebody faded. Not somebody faded means like, that's how the moves happen. It's not somebody does big, that's why this happened. He had so many moves which were got faded. So anytime it like an went up, there was a fade. And if somebody thought, okay, look, this is the short kind of a thing, and then like such a violent fade. You see this? And bunch of fades on this thing, right? And you'll see that This was like an immediately faded in this direction, faded. And this is not how this looks. This is 1 minute, okay? But if you look at it in 5 minutes, what happens when you took a higher time frame is the volatility get compressed. So you don't feel it like that. What you see is like, you see it like that. You don't see the volatility within the 5 minute candle also, right? And this is the key, the number one key to making profit is to understand the market structure and the fading nature of moves on intraday basis. And that's worth $1 million. So please send $1 million each, all of those who are here. And this is exactly what like the algorithms and all these programs are designed to do. Means like if you look at like most of the day trading algos and all, like they make money by fading strength. They're not necessarily buying. Yes, they do buy also, but there's more money in fading because of the sheer of speed at which fades work. And this is not going to change, okay? This, like, as we say, no, in terms of market structure, look, momentum burst is the inherent nature of market moves when we're looking at swing trading, right? That's not going to change. That has not changed. It's been the way the market has been for hundreds of years or since it started. This intraday fading or the intraday sudden fades is going to be always there. Okay, that is the way the market is going to operate. And then people don't realize, and then they say, "Oh, the algorithm screwed me. The market maker screwed me. They just like are after small people." It is not. Okay, it is not like that. It is that inherently, when buying comes in, okay, people who are watching that stock. There are like people who are buying for a longer term, end of the day swing kind of a thing. They just like they don't care what is the volatility, but there are lots of followers who are coming in. They're looking at getting out, and as soon as that buying is over, then you get a fade. And many times the fade is so violent that the entire move which happened will get like undercut also sometimes, and then the stock will move in exactly opposite direction. And then if you're a new, you're just like sitting there like a deer in a headlight kind of a thing, completely stuck, frozen. And by the time you realize what happened, you're down 8% in your account. How do you notice by watching bid ask spread during the intraday? Means like if you're looking at watching, like if you're watching that day TVIX, the moment it reached $1,000 and like it traded $1,000 for a fraction of a second. The moment the $1,000 come in, and like immediately started going down, and it just kept going down for like $30 or something like that. So when you're watching bid ask spread, like you can see, like I cannot explain you uh, how you have to watch it to see how things are operate. And most of the trades I do many times, they are not based on chart. They are just watching the bid ask spread, and you see buying coming in or something is going down there, and you suddenly see things are slowing down. As soon as it slows down, you guys like get out, and then you start anticipating there is a fade which is going to happen in this day, and you see like people start buying, and then the stock is up $4 or $5. By the time the candle is formed, I'm in that trade. Let me just knock up all these questions. A lot of questions people have because good broker or data feed IB. We just look at this. Yes, TVX is getting in risk. Okay, is the TVX? Okay, see. Uh, in order to do this game successfully, you have to become consistently profitable. The profit potential is very high in this kind of a thing for the amount of effort which you put in, obviously. Like when I used to trade TI30, which I not traded in recent month because of the high volatility, but consistently, and I used to only trade for the first half an hour. And I used to like, on an average day, anywhere from $400 to sometimes 5,000, 10,000, 8,000 kind of a thing. So you have to look at that. How do you know range expansion is completed? Means you don't know. 5-minute chart, like if it ends at the higher, then the range expansion is completed. But on intraday basis, it's like, and it happens so fast. This looks like a 5-minute candle, like to you this way, but it might be that in 1 minute the stock went up to here, and then in the next 4 minutes it went up like that. So it's very fast, basically. And a lot of people spend so much time doing day trading just based on chart patterns and things like that. But if you don't understand the structural nature of these moves, why they fade and the propensity to fade, and especially when you go on to 1 minute chart, you will see it more clearly. Then you will realize, look, this game is different than what you think. And then if same chart, if you look at it on a 1 minute, you will see that it's a different ball game altogether. This is after hours, okay? So let's take this and let's edit chart properties, make it black. So let's take this out, okay? So this is the close, okay? And look at this moves intraday. You'll see better that look, and if something happens and starts going up, there's a fade. And that fade wiped out your 3 candles or 4 candles profit. And suddenly, like, if something, see, this is the problem on day trading. A lot of time, look, and something, if you can find a clean pattern like that, then it's good. Like, and here at least you knew, look, and this was going down, and then there was a transition candle. A lot of fades which happen on intraday basis do not even have that kind of a pattern. Okay, what they will be, suddenly things are going up, and then they will fade out of nowhere, like something which is going down, and you think, oh, I found a good short entry, I am like in a king, and then like it just fades in the other direction very violently. And sometimes like this fades are so violent, but that's where the opportunity is. Once you understand this, then okay, coolly you can design strategies and you can think, because here, like there's no transition candle. A lot of people are thinking in terms of transition candle. Okay, this is going down, so there'll be some sort of a hammer or something, and then I'll buy. No, it just like was going down, and suddenly next minute you got like somebody decided to buy 121 or 71,000 or 121,000 of shares, and next thing you know is the stock is up $2.51 in 1 minute, and wiped out like whatever stop you put in also. That's why uh, you have to take profit very quickly in day trading, rather than like thinking my stops will get hurt and will get hit and I'll come out. Many times the violent counter reactions are so fast that what was a profit for 3 minutes get wiped out. I hope you understand this, because this is more important than like the chart patterns and things like that. Yeah, fixed size is what I would recommend on day trading, because trying to like dynamically figure out how many shares to buy and all, I don't think is very good when you're in a very fast market. This is why using VWAP is effective strategy instead of trade job is to beat VWAP. If the stock is not respecting VWAP, then 1 or 2 funds are not in control. Yes, that's happens, but like if you look at many charts with VWAP also, you'll see that the violent reversals or violent fades still will happen. They are not necessarily going to be, it's not a bad strategy, but like I agree with you, look at VWAP is one of the ways of handling this trading, but still the violent nature of counter trend moves is something which a lot of people underestimate, or those who are not day traders or those who are not studied don't even know this is how the market operates. I only do one at a time. How do you know funds or institutions are buying or selling? Means somebody buy, like when you get orders which are large size orders, they're not coming in from mom and pop. They're from large institutions basically. How do you identify 3 to 5 stocks to focus on per day? In other words, how do you use tools like Five or those size to predict stocks that will make my learn on a daily basis? That's exactly what I said, told you in the first 1 hour. Look for news. The news is where the stock is going to make a move. Look at pre-market gaps. If it is like a gapping up 10, if you're looking for those very volatile kind of a move, look for something which is gapping up 10% pre-market, post-market on a 100,000 plus kind of a volume. So that's the thing. Fade, fell short. What percentage of trading unless there is a news catalyst, since I'm not ready to trade with buying. Uh, I'm very clear if I'm taking a trade, like before taking a trade, I'm very clear whether I'm taking it for a day trade or a swing trade. So I don't have this problem. I've done this for 20 years, so some of these problems are not there. I'm always looking for a market that is losing momentum and then go the other way. Exactly. That's a very common strategy. Most of the very successful day traders, they are very good at trading. Most of the amateurs are looking for trend moves. So that's why they fail. Yeah, trailing stop are important, but to a large extent, if you are in a very fast market, trailing stop ultimately becomes a market stop once that thing. So yes. What do you understand by watching bid-ask spread during intraday? It's not only bid-ask spread. It's like how the transactions are happening, because when buying comes in, you can see it on the bid-ask. They will start they'll just keep, if there is a big strong buying comes in, like no matter what the price is, they just keep hitting the bid or ask. If it is selling, it is opposite. So it's something which you have to watch to understand that, and it's not something which can be explained. I don't really pay attention to that, and but exhaustion is very common, and I'm not sure it happens on this particular times. It happens all the time. It happens as soon as like any stock which has got a climactic buying, and people pile on, like it will have a thing. So it can be in the first 10 minutes, it can be in first 15 minutes. So it's not really time specific. Yes, you can use, but I told you the practical problem of using scanners to day trade is that you see something on a scanner. Okay? By the time you react to it, uh, that's like in a life and death situation. Most of the time, market orders. How do you know which impulse moves are too strong to fade? I don't know. I just look at what is happening and react to things once that is happening. Means I anticipate something is up 3 or 4 candles in a row, like 15 or 20 minutes, and everybody is going crazy. Then I know, look, that thing is going to fade. So I don't buy things which are going strongly up. I don't really, there is no time to think like that. And if you have so many questions like this, it's very difficult to trade like in a day trade. It's like you just see and react, see and react, see and react kind of thing. I'm not looking for trading trends. So I am looking at if I get in, and when I was doing TI-30, I had like clear target, look, if I'm risking 40 cents, then I was looking at getting out at least part once it was above 800 kind of a thing. So sometimes then if things start trading in your, as soon as you enter, then you get out even faster. Yeah, volume is not a factor. Currently on TVIX, okay, so much of anticipation that it's only around 30-40%, but most of the time it can be even lower than that. How do you anticipate the fate? Hundreds of examples, thousands of examples study. of Feds, and look at it when like there is a peak buying happens, almost that it is going to be faded kind of a thing. One of the good indicator is like when people post on the timeline saying the stock is good, and if you're going and buying based on that, more or less likely that that is the point where it will start fading, because once the amateur orders are in, uh, it starts fading. So it's chart tape reading basically. Does 15-minute work for day trade? Yeah, 15-minute, 1 hour, anything works. But that's a slow trade. That's not really like very fast trade kind of a thing. Trading is more profitable than long. The opposite instrument, see, oiled and olive. Yeah, I mean, it's like, I don't know. These people have very low understanding of how triples works. So it's like the range on an opposite instrument which you're trying to trade against TVIX is so low that it's not going to make you the same money, but it is what it is. You can't uh, educate everything. Do you still recommend 3 minute lynch on 5 minutes? I'm just giving you a background on how the market behaves. I've not even talked about specific techniques. There is a way to make 3 lynch work on 5 minute chart. Those are like more trending stocks. And that's why I talked about that video, which I bumped. See that video? Yeah, I completely agree with you. Like a lot of these day trading people who are trying it for, they are like just not geared to do day trading, because they need to relearn that. Look, you just, when you have profit, take it. When you have profit, take it. Because the opportunities in a day are hundreds. So you just don't like think in terms of, I'm going to let this run and all. Like, yeah, but like I also feel that I get out too early. But like as long as it's a profitable trade, I am not worried. Like I don't really care what it makes after I'm out. One, understanding the tape, understanding the structure of the market, understanding why things happen that way in day trading is very critical. Unfortunately, most of the books on day trading or many of the sites, they don't really emphasize that. They just emphasize, oh, buy here, green thing, buy, MACD, things like that. But that's like, then it's such a uh, warped view of data trading that that's why they don't make money. TVIX 5 to 6. Some days like when it was like that day when it was like $1,000 and all that day, almost 16, 17 trades. Most of them scalps, like you get in and you get out at $2, $3 kind of a thing, or $4. Uh, what percentage of your trading account value would you put in a day trade? See, one of the things is like I'm in a very different situation than many of the people. One of the reason why I do day trading is also like I get once in a while I get somebody who makes a big loss, and then when he comes in saying, "Look, I've made this loss of 1 million, or I made this loss of 2.4 million, and I don't know how to recover. Can you recover it for me?" Kind of a thing situation. Then the only way to recover those kind of losses in a short period of time is to like basically do bunch of day trading. So it's not my capital always. Most of the things which I'm doing on TVX on account where a lot of losses there. So uh, it's not my money. Yeah. Yes, exactly. TVX perfect example against all the big point moves, but took 30 points over and over again. Yeah, I mean, it's like you're a pro man, like you know what you're talking about. Many of the other people have lost more than that in just one trade. Uh, can you say how you watch bid and see whenever you look at like the market is unfortunately closed, but whenever you're looking at like in a bid and ask trade, not bid and ask spread is what I'm looking at. What I'm looking at is like when you look at a stock, which is like basically trading on IB, you will have the bid, ask, and the close, right? And when buying is happening, you can see that, look at the there is buying happening because there is like the speed at which buying is happening. You can see that. So that's called prep reading. Try that for like one day and you'll understand many of these things. So that's the way to look at it. So here's what I discussed so far, okay? Now let me just make sure that this goes. So this is like an ZM, just to give you an example on 1 minute chart. Same way, if you look at a TVIX chart on 1 minute, you will see that you look at how many these things, impulse moves happen. So just like scalping can be very profitable because when you see something starts fading immediately or anticipate fading kind of a thing, it's very profitable, okay? And even if you see a less, say like Bentex, okay, this is what happened intraday. It's not a very super like in a trading stock. This Bentex, TVX obviously is good. Let's look at like, say, if you don't want to do something like TVX and you want to do lesser thing kind of a thing, let's look at like say Apple, okay, which is less because it's very liquid. It's like one of the highly traded stocks, but you'll still find that you look at it, there'll be like things going down and suddenly it faded. Things were going down and suddenly there are no transition candle. Like people are on a intraday basis or on a daily basis, you're trained to think in terms of transition candle. And I hope you people understand what a transition candle is. Transition candle is like basically when you're saying, look, and a stock is going up, okay? It keeps going up, it keeps going up, it keeps going up. And then there is a hammer, supposing, okay? Or an abandoned baby, like it keeps going up, it keeps going up, it keeps going up, it keeps going up. And then it gaps up and then like it closes near the low or closes like this. Any doji kind of a thing, supposing. Now that's a transition candle. From this transition candle, what is going to happen is the stock is going to pull back, right? That's what you're trained to think in terms of, okay, from this, similarly, like it's going down, good example of transition candle on a daily chart is like this. There's a perfect example of a transition candle, right? And if you see PFGC here, okay, what happened is stock was going down, and there was a transition candle, and that transition candle was a signal. And then if you entered based on that transition candle, next day the stock made 59% more. So this is how like we scan for, right? And this is why we scan for reversals or stuff like that, basically. So if you scan for reversal, then this is where it will show up in your reversal scan. And if you enter based on that, you had a transition pattern and the transition pattern led to, but on intraday basis, the stock reverses most of the time without a transition pattern. Okay. And very, very, very common. So that's why it's a different world in terms of if you're just used to looking at daily charts, and if you're not looked at a lot of intraday charts, and especially on the time frame on which you, it's very different reality because in daily charts, you're so used to looking at transition candles, which will tell you, look, this move is about to end or it is going to turn. But in intraday trading, this move will happen without this transition candle. It will be like this, and next day it will just like, next minute it will just like reverse. So that's the problem which you are going to have again and again in terms of day trading. So here is what I would summarize till now what I said. Okay, and we might end today here. Later in the day, I might have, if I have time, I will do another thing to continue this. But this was just to set you for, look, if you want to make money, day trading, okay, news. Okay, that's the number one requirement. That's the most profitable strategy in this thing. When you're doing swing trading, you're looking for a stock which shows high linearity, right? Here, you want high volatility. Because high volatility is equal to high profit potential when you're day trading. Because it is one, it is going to give you more opportunities to make trades during the day. Two, when you enter a trade, for the per amount of risk which you're taking. If it is highly volatile, if you risk say $1, a highly volatile stock which makes 10% move in 5 minutes is going to give you more than a stock which makes 1% move in 1 minute, in 5 minutes, right? So you need that high, very high profit potential. Okay. There is no way to make money, DT, day trading, using others' alerts. Hundreds of services are there and hundreds of people have tried this, and I'm sure all of you have tried this. And if you're not successful, ask why it is not possible, and it will save you a lot of money. The most important thing is structure of intraday moves, and the most common thing is fades, like basically suddenly the moves which are you anticipated is going down in one direction will fade in the other direction. So one of the most profitable strategy in day trading is fades. Okay. Now we'll look at operationalizing this. Like if we look at this and understand this, then you can operationalize a strategy which can make you money consistently if you understand this, which is basically the mechanics of how you find these kind of trades, how you enter, how you exit, how you do this kind of a thing. Okay, and so how many slides? How many charts? 3, 1, 2, 3, 4, 5, 6, 7, 8 cards or 8 more topics to cover kind of a thing. So what I'm going to do is I'm going to stop it here. Okay, and I'll post a link for a meeting which might happen after a couple of hours, where for those who are interested in learning the intricacies of how to find this and all, then I'll spend some time and looking at how to operationalize this thing. But I highly recommend go and look at intraday charts and try and understand this fades, especially look at 1 minute, 5-minute chart and confirm this for yourself, how this works, okay? And then think about it. Just don't go and tomorrow start day trading, okay? The amount of opportunity is huge, but you have to have this structural understanding. Look, this is a game which is about high volatility. This is exactly opposite of what you're doing on a swing trading basis. There are no transition patterns. So if you're just thinking, I'm going to find transition patterns, it doesn't, they are not there, just not there. So those are things which you need to understand, okay? So I would look at basically, most probably, I would say that we'll start at around 1 p.m. I'll post a link for the new meeting in the next 15-20 minutes once I figure out things at home. And then we'll look at how you can do that, how you can build a foundation for finding day trades and doing this daily and be consistently profitable and add another line of business where you can make money.